Hi, Tara. So I promised that we were going to look at the numbers once you're done the writing. So fine, let's look at the numbers. So what we're trying to say here is that we have a scenario where we want to know how many of these items, because this is about manufacturing, right? How many do we need to sell to break even, if you like? That's the argument here. So the key point here is think of this. Let's call this widget a table. So a table, you make the tables and you sell each table for £60, right? You sell each table for £60. Now each table needs enough material where you need £12.25 of it. You'll spend £7.75 on labor. That's the number of hours and some other variable overhead. So you have a total of £40, right? So the first question says that um, if the fixed cost of production, so imagine this is your rent, right? So imagine your rent is 20,000. That's your rent. Now your rent is a fixed cost, right? So what we're saying here is these aren't fixed costs. These are what we call variable costs, right? So when we say variable costs, these increase with the number of tables that you make, right? The more tables you make, the more of these the more of this cost you incur. But this rent of 20,000 is 20,000, irrelevant or irrespective of whether or not you sell a table or not, right? You always have to pay £20,000 rent, right? So the question here is, if this is the only thing you make, how many tables you need to sell to pay your rent? So if you sell each table for £60 and each table costs you £40 to make it in terms of the material, the labor. Imagine you're in your house making an item and you have to pay each of these things you have to spend £40 to make the item and you get £60 to sell it. So you're literally making £20 on each table, right? So the question is, well, how many of these tables are you going to have to sell to pay off your rent of 20,000? Well, you're going to have to sell 1,000 tables, because when you sell 1,000 tables, right, you would have made £20,000, because at that point you would now be able to pay your rent. So let's pretend here we are, 60 times 1,000 tables, and your cost is 40 times 1,000, right? So you'd have 60,000. Then you take away the 40, which is the cost of making the 1,000 tables, and therefore you'd have 20,000. This 20,000 is referred to as contribution. Or when I say anything where you have the selling price minus the variable cost, whatever you get is the contribution. We say contribution because it's contributing towards getting us to pay off our fixed costs first before we start talking about profit. So when I have my fixed cost here of 20,000, right now I've made no profit. So at break even, you might remember this from your business classes, at break even, you make no profit. There's no profit, there's no loss. You're just right there on the cusp. Which means if you sell 1,001 tables, well, you'd start to make profit, right? Because then contribution would be, if you like, another 20,020, right? Because that's an extra table. I'm just sort of, and then you would have this profit of 20. So that's part A, right? So the answer is 1,000 tables, but you need to just write it out, kind of based on what I've done in a way that you understand. Okay, great. So now this next question says, let me just get rid of this again. This next question says that, okay, now it definitely, in costing, we need to make certain types of decisions. Sometimes we need to set a price on our products. So it's a completely different question, right? Oops, where'd that go? Okay, completely. The next question here says that, so we've done A, done. So it says, we expect that we're going to be selling 15,000 units, like 15,000 tables. Now, the absorption cost per unit. Now, what this is saying is that, well, okay, if I know that I'm going to be selling 15,000 units, right? Now, if someone comes to me and says to me, oh, Ian, how much are you going to sell each table to me for? It's a completely different question now. We've moved away from break even. So I'm like, well, in order to make sure I'm all right, I know definitely there's £40 as part of the cost of making a table. But I also want to cover my fixed costs. So I'm going to sort of say, well, then, therefore, there must be the additional cost of 20,000 divided by the 15,000 tables, right? I could basically split the 20,000 by the 15,000 to find out what the fixed cost is per table, because I want to make sure that for every table I sell, I'm able to cover this as well as this. So yes, I know I have £40 already. The question is, what else do I need to include? I need to include this fixed cost per table, which comes to about £1.33. So the full cost, or the absorption cost, if you like, is actually £41.33. So now I know that if I sell it for more than £41.33, and I sell the 15,000 tables, I will make a profit. So that's the absorption cost of making a table. You could, of course, what you could have done, of course, well, this is probably the best way to do it. You could have done 40 times 15 and add the 20 to divide by 15, but that doesn't make any sense. This is the same thing. You know you have at least a £40 cost of making a table, and then you also have to think about how am I going to deal with this 20,000 as well, right? So that's what's going on over there. And then finally, this question of a marginal cost statement, that literally now just says, well, prepare the profit. Tell us how much you've actually made, if you like. What's the situation based on these 15,000 tables? Well, it's actually just what, like I said, what it is. All you're doing now is you are writing. You've got here. Well, you sold each table for £60. 15,000 tables. Find out what your answer is. Each table cost you £40,000 to make. Find out what that is. And then you had a fixed cost. You get your answer. So this, get your answer here. Get your answer. Take this away from this because that's what you sell it for. That's the revenue or the sales. That's the cost. And then you have, it's not profit yet. It's just contribution. So whatever your answer is here, put it here. Then take away the fixed costs of 20,000. And whichever your answer is here is your profit. And that's what a marginal costing statement is. A marginal costing statement means that it says to us that we should clearly separate contribution out and then fixed costs out as well. So these are concepts you will still need to study before you go into the second year. They're not going away. So you still want to spend time looking at them, if you like, over the summer. Great. I hope that helps you.